Coming to receipts. Receipts means the amounts that we have received during a particular financial year in the business. Just as in case of expenditure, we have capital expenditure and revenue expenditure. Similarly, in case of receipts, we have two kinds of receipts, that is capital receipts and the second part is revenue receipts. So let us discuss capital receipts first. What are capital receipts? That is any receipt which usually implies an obligation to repay, like additional capital. When the owner brings in additional capital, it actually increases the liability of the business towards the owner. So an obligation to pay is there. It is a capital receipt. So we can say that it usually implies an obligation to repay, or the receipts received on account of sale of fixed assets, or what we can say is liquidation of capital expenditure. So when you have these two kinds of receipts, they are covered under capital receipts. Again, coming back to the same points, remember capital receipts would be used in the preparation of balance sheet. On the other hand, the second category of receipts is revenue receipts. Now students, what are revenue receipts? They are the receipts of regular nature and do not imply an obligation to repay. That is receipts on account of sales, that is regular sales, sale of goods, or royalties received, or interest received. They are the part of regular business activity. Such kind of receipts do not have to be repaid, hence are covered to be regular part of the business and under the category of revenue receipts. So receipts on account of sale of goods or regular activities. Remember students, capital receipts are of non-recurring nature. I'll write it here, it is non-recurring. Whereas revenue receipts are recurring. They are part of regular activity, hence keep on reoccurring in the business.